Understanding the stock market and market trends. Welcome, dear future stock market aficionados, to our enlightening video on understanding the stock market and market trends. The stock market can be as perplexing as a labyrinth and as intimidating as a roller coaster, but fear not. By grasping its basic concepts and learning to analyze market trends, you'll be well on your way to making informed investment decisions. First, let's demystify what the stock market is. Picture the stock market as a bustling marketplace where stocks or shares of publicly traded companies are bought and sold like fresh produce. When you buy a stock, you become a proud shareholder of that company and have the potential to earn a return on your investment through dividends or capital appreciation, just like nurturing a plant and reaping its fruits. Now, one of the most crucial concepts to wrap your head around is market trends. Market trends refer to the direction in which the market is moving, much like a weather vane. There are two main trends to watch for: bullish and bearish. A bullish market is like a happy-go-lucky bull, characterized by a period of rising stock prices. On the flip side, a bearish market is like a grumpy bear, characterized by a period of falling stock prices. To analyze market trends, you'll want to examine market indicators such as the Dow Jones Industrial Average, the S&P 500, and the NASDAQ. These indices track the performance of a group of stocks and can provide a good indication of the overall market trend, like a weather forecast for your investments. Additionally, it's crucial to pay attention to economic indicators such as GDP, inflation, and unemployment rates, as they too can influence market trends, much like the butterfly effect. Volatility is another important concept to understand, and no, it doesn't refer to a sudden craving for spicy food. Volatility refers to the level of fluctuation in stock prices. High volatility means that stock prices are fluctuating more rapidly, like a bungee jumper, while low volatility means that stock prices are more stable, like a leisurely stroll. Volatility can be caused by a number of factors, including economic news, company earnings reports, and political events that are as unpredictable as a game of whack-a-mole. In a volatile market, it's essential to have a plan in place to manage risk, like having an emergency exit strategy. Diversification, the art of spreading your investments among different types of assets, such as stocks, bonds, real estate, and crypto, is another key aspect of understanding the stock market. Think of diversification as not putting all your eggs in one basket. Diversification can help reduce the impact of a downturn in a specific market or asset. For example, if you have investments in both stocks and bonds, a downturn in the stock market won't hit your portfolio as hard as if you were all in on stocks. Similarly, adding crypto assets such as Bitcoin and Ethereum to your portfolio can provide another layer of diversification and potentially protect against market volatility. It's essential to note that while crypto is considered a high-risk investment, it can also provide high returns, like riding a wild roller coaster. By diversifying your portfolio, you can spread the risk and increase the likelihood of long-term success. Understanding the different types of stocks is another key aspect of stock market wisdom. There are two main types of stocks: common stocks and preferred stocks. Common stocks are like the popular kids in school. They are the most commonly traded type of stock and provide shareholders with voting rights and the potential for dividends and capital appreciation. Preferred stocks, on the other hand, are like the bookworms. They don't provide shareholders with voting rights, but usually have a higher dividend yield and have a priority claim on assets and earnings in case of liquidation, making them the responsible older sibling in the stock family. Now that you're well on your way to becoming a stock market savant, it's essential to develop a plan for achieving your investment goals. This includes setting clear and realistic goals, like aiming for the stars but having a backup plan in case you only reach the moon. Create a budget and stick to it, just like committing to a gym routine, and regularly review and rebalance your portfolio, like giving your investment wardrobe a seasonal update. Finally, the golden rule of investing: always do your own research and never invest in anything you don't fully understand, like blindly following a recipe without knowing the ingredients. This includes staying up to date on market news, reading annual reports and financial statements, and speaking with financial advisors or professionals, like having a trusted mentor or tutor by your side. Thank you for watching our enlightening and entertaining journey through the world of the stock market and market trends. We hope this video has provided some valuable information to help you navigate the stock market's twists and turns and make informed investment decisions. Remember to always do your own research, set clear investment goals, and manage your risk like a tightrope walker. And don't forget to subscribe to our channel for more tips and information on personal finance and investing, sprinkled with humor and wit.